What's up, guys? I've got just a quick little news update for you today. Couple stocks reported earnings today that I track very closely for a couple reasons. One is that they both pay very high dividends, and then the other reason is that their valuations are actually looking pretty attractive at this point. But both of them reported earnings. One of them is PetMeds. This is also known as 1-800-PetMeds. You could go to their website, like 1-800-PetMeds.com, and you can order pet medications. And I'm actually very interested in that industry, so we'll talk about that later. But they reported earnings, and it was weak earnings, and the stock crashed over 10% down today in just a single day. And then the other stock is IBM, and IBM is another stock that I track very closely. And actually, I should just give you guys a quick disclosure. I do own IBM stock, but it's a very small position. I only purchased a few shares. I made a video about them a couple months back, and I did end up buying the stock, but I only bought a few shares. So it's very insignificant position. But anyway, they reported earnings today, and their earnings were actually pretty good. And so the stock climbed, I think it climbed by about 7% today, which is pretty significant. Now, we obviously had a very bad day in the markets today. Reports coming out from China about their GDP slowing down even more. I think it's now down to like 6.4% growth, GDP growth. And then there's also more drama going on between the US and China with the whole trade fight. But, that's kind of being reported everywhere. I really want to talk about these two stocks that reported earnings, and I want to give my thoughts on their earnings, how I feel about the companies at the moment, and if I plan on buying any of their stocks anytime soon. And in the case of IBM, if I plan on adding to my position or maybe selling out, or what I plan to do. So we're going to talk about all of that and more in today's video. Let's get started. What's up, everybody? My name is Ale, and welcome to my world of stocks. All right, so starting with IBM. Now, if you don't know anything about them, they're mostly an IT company that offers both hardware and software solutions to customers who are mostly businesses operating in a variety of different markets. So IBM helps them operate more efficiently with marketing, data analytics, security, finance, transactions, and they also offer them cloud computing services with IBM Cloud, and they also recently acquired Red Hat, which offers them more open source cloud services, and they're also an expert in what they call the hybrid cloud, which helps businesses transition to the cloud. Now, that's all I'm going to say about their business in this video because, like I said, I did make a video about them a couple months ago, and it was a pretty big video where I discussed like the entire company and everything about their stock. So if you want to check that out, I'll have it in the description. But one of the more enticing attributes of IBM stock is their dividends and their valuations. Now, currently, they offer a very nice dividend yield of over 5% with a payout ratio under 50%, a double-digit 5-year growth rate of almost 11%, and a very nice dividend growth history of almost 20 years of growing that dividend out every single year, which is very impressive. On top of that, their valuation is pretty attractive from a certain standpoint, with a forward PE ratio of less than 9 and a PS ratio of about 1.4. However, their PB and PEG ratios are both much higher, although Yahoo Finance does calculate PEG ratios a little weird. But in any case, the stock has been hammered in recent history due to very poor performance from some of their legacy offerings, having now dropped almost 25% in the past year. And while you'd expect that a 5-year buffer would really help a stock, they actually dropped even more in the past 5 years, down over 30%. So that's very disappointing performance, considering that you gave them a total of 5 years to really get their act together, and they still performed very poorly. But they did see a nice pop today. So what exactly happened? Well, earnings were pretty good. Now, I'm gonna have analyst estimates on the top, and then I'll have the actual results on the bottom. And you can see that estimates were still negative for the quarter as IBM continues to transition away from legacy products to more high growth initiatives. But analysts were expecting revenue to be at 21.75 billion, but IBM actually beat that estimate just barely with 21.8 billion in sales. Then analysts were expecting $4.84 in adjusted EPS, but IBM reported slightly better numbers at $4.87. And while these figures are still down year over year for the quarter, this marks the first year in a very long time that they actually saw revenues go up. I think it's been like 5 or 6 years since IBM had revenues go up, so even though sales only increased by 1%, it's still better than nothing. And perhaps more importantly is that some of their high growth investments are actually paying off. See, their strategic imperative segment is comprised of their high growth initiatives, and that jumped by almost double digits year over year at 9%. While their just as equally important cloud revenue jumped by 12%. So while this is a barely growing company, it's still one that is expected to generate over $12 billion of free cash flow in 2019 alone. And if they're able to turn their business around and transition from legacy products, which by the way, they just sold almost $2 billion worth of legacy software, to higher growth products like their hybrid cloud offerings, which by the way, IBM states that only around 10 to 20% of enterprises are even transitioned to the cloud, so there's plenty of room to grow there, then I think IBM becomes a much more compelling stock, especially with that really large dividend that they pay out. Still, this is by all accounts a transitioning company that, went like 5 or 6 years of having revenue declines, which is very poor performance. And then I also feel that they overpaid for the Red Hat acquisition. I went into that in the other video that I made, but time will tell if that acquisition actually pays off. I do think it was a necessary acquisition because IBM has to do something to turn their business around. They need to grow somewhere. So I do like the fact that they made a move. I just don't like how much they paid for it. And other people feel that it wasn't even a good move to begin with. So there are some pretty big question marks here with this company, but maybe we're starting to see a little bit of a transition here. And if we can go a couple more quarters of having some better performance, then maybe I start adding to my position. Okay, and next up in the news, we've got 1-800-PetMeds. And this is a stock that I've been tracking myself for 2 reasons. One is that I'm attracted to their dividends, which currently sits at a yield of over 4.6% with a payout ratio of less than 50%, a double-digit 5-year growth rate of over 10%, and almost a decade of consistent dividend growth. And then the other reason is that the pet industry has been booming for years, and it's a pretty stable market to be in because people spend huge amounts of money on pets even when economic conditions aren't that great. And when it comes to pet medication, well, that's even better since you really can't skip out on medications that your dog or cat desperately needs. And so the business model that 1-800-PetMeds uses is basically through their online store. And because they're officially certified like any other pharmacy, they can sell you any prescription drugs as long as you input the prescription and then they verify it by confirming with the vet. And speaking about the market, according to the American Pet Products Association, they estimate that the US pet industry was worth over $72 billion in 2018 and has climbed by billions of dollars almost every year since the 90s. And despite most of that being attributable to pet food, when you combine the supplies, OTC medicine, and vet care segments together, that makes up over $30 billion in sales. Keep in mind that PetMeds only did less than $300 million in sales last year alone, so there should still be plenty of room for growth. Having said that, PetMeds is not the only company trying to take advantage of this market, and they're starting to see tremendous competition. For one, you have traditional pet stores like PetSmart and Petco that have invested in their online shopping websites, and many of them have vets right inside the store as well. Then you have other online competition from websites like Chewy.com, Olivet.com, and ValleyVet.com, and that's not even taking into account Amazon. Now, to my understanding, and you guys can correct me if I'm wrong, but Amazon does not currently sell prescription pet medication. However, it does sell a number of OTC medications, and they're usually for the same price, if not better, than PetMeds. Now, we'll talk more about their competition in a second, but let's first talk about their stock and their earnings. Now, their stock is still technically up in the past 5 years by around 55%, but more recently, the stock has been getting crushed. In the past 6 months, it's down over 40%. In the past year, it's down over 56%. And just today alone, they reached a new 52-week low of around $20 per share, having dropped over 10%. And again, the reason has to do with earnings and a weak outlook. Now, sales only came in lower year over year by around 0.1%, but cost of sales went up dramatically, which brought down their gross profit. And they ended up with net income down double digits at 14%, which is a pretty big drop. Add to that the fact that they missed revenue estimates by around 7% and EPS estimates by over 20%, and you're talking about a pretty horrible quarter. However, the company is still performing pretty well overall as they remain profitable by millions of dollars and increase their sales in the past 3 quarters combined by around 6% year over year and net income by around 15% year over year. And they were also able to increase reorder sales by almost 5% in the quarter and 9% in the past 3 quarters combined, which is impressive as it demonstrates good customer retention. Still, the quarter was a big disappointment overall, and when speaking about the lowered profits, their CEO cited the increase in online competition as the main cause, saying, "The market was much more competitive during the quarter, and as a result, we gave additional discounts to our customers to stimulate sales, which had a negative effect on our gross margins. We will continue to be aggressive with pricing and promotions and increase advertising to address this more competitive online market." So the scary thing here is that discounts and advertising is already hurting their bottom line, and they expect it to continue because of increased competition. On one hand, that is definitely a concern, but on the other hand, I'd rather them fight off this increase in competition with more advertising with lower prices rather than just give up. Having said that, I don't know enough about this industry to say that, I'm ready to jump into a big position in a stock like this, but it is becoming more attractive to me as, their dividend yield actually continues to go up as the stock continues to get hammered. And the other thing is that their valuation is becoming more attractive. In fact, they have a forward PE of just 9, a PS ratio of 1.5, and a PEG ratio of just 1.1. But again, I'd have to do a little more research before I'm ready to jump in. So if you guys would like to see a more detailed analysis of this stock, make sure you let me know. And if you're invested in either IBM or PetMeds, make sure you let me know down in the comment section as well. I'd love to hear your thoughts, and it would help me out as well. I'd love to hear the different perspectives and things like that too. So anyway, thank you so much for watching. I hope that you enjoyed this quick little update. I just wanted to share my thoughts on a couple of earnings that were announced today, and I will catch you guys in the next video. Take care. Bye-bye.